live. Travis is not going to be able to be with us today, so it's going to be just me. We're going to react to the CPI number in real time, and then we're going to talk about autos, which include one of our favorite shorts, a stock that's tripled since the COVID lows, and we think it's about time to get to enter on the short side, whether via puts or shares. I'll discuss that with myself a little bit later here. So let me just share a screen with you. Oh boy. Okay, so we're seeing some pretty good selling off that CPI number, which makes sense to us. I mean, anybody who's been following us has seen that we've been pretty bearish everything pretty much except biotech since earlier this summer. Again, we reiterate kind of October targets for lows in semiconductors and some of the FANG names. But we are starting to look for green shoots in things like banks. We think this is the last month of puke. Same thing with energy stocks. I'm just watching price here as we push lower in SPY. But one thing we did want to talk about on a kind of a sector-wide basis, just because some of these companies are so loved at this point, and in some cases so hated. I mean, if you check Tesla Q Twitter, Tesla's certainly hated. But we're going to do the auto industry, and I wish Travis was here to share his Ford thoughts with you. I think they're very interesting. He kind of looks at it from more of a MBA case study approach. So I think we'll do some separate content where he just goes over his targets for Ford. But again, if you look at my targets over here across classic automakers, electric automakers, and auto sales and services, not real great. Ford, almost 40% of downside, which makes sense. We kind of blew a little bubble there. I believe it was late last year, and it had a pretty significant run up. So, it would make sense in the context of bearish until October that would see some further downside. Wow, they're really working risk lower here. That's a 37.50 in SPY, and we're way below support in QQQ. This will be an interesting day. Hopefully, you've been tuning in and you've entered some of our trades for July and mid-July, because wow, it looks like some of those names are going to be taking quite a tattooing today. But anyhow. So let's go to these classic automakers here. So we have Ford, Ferrari, General Motors, Toyota, and Honda. And as you can see, not real great. We have, if our Foliko's favorite short is Ford, almost 40% downside over the next 3 months. Pretty bad for Honda too, 31.6. General Motors, same thing. It is interesting, though, to see the juxtaposition of our Ferrari forecast and some of the other automakers, because in a recession or a depression kind of environment, I would expect Ferrari to perform pretty much in line, right? I mean, everyone who has that that Ferrari Bitcoin money is probably getting repossessed in that situation. So. It's very interesting, but that is something that's important to take away, that pockets of strength are just important, or relative strength at least are just as important as pockets of weakness. So it's almost just as instructive that we see Ferrari down less than some of the more traditional counterparts. So that's actually will be one I throw on the watch list on the buy side for once this is all over. We can use that relative strength in another way to see, what works on the long side, in addition to, which one should I be adding on the short side. So now I'll move to everybody's favorite. We love these electric automakers. We love to trade these electric automakers. More importantly, I mean, Tesla is one of the greatest, trading instruments this market's ever seen. And what's interesting is, given our out and out bearishness, we're not actually that bearish Tesla. I wouldn't be shorting this. I wouldn't be, doing much with it really. I'd just be watching. But, given some of these downside targets I have highlighted in red, that's actually pretty impressive, if I'm honest. So, this is something I definitely keep a close eye on, because when entire sectors are in agreement, it's just as important to see what are the few things in that sector that don't agree, because that's just as, like I was saying, that's just as good information. So Tesla and Rivian would be the two ones to look at on the long side. We do have some kind of short-term squeeze strength for Nikola. That's not something I want to trade. I mean, I just think, isn't that the automaker that rolled the car down the hill, and now the CEO's in a whole bunch of trouble? So that one's just a do not touch for me, even though, there is a squeeze catalyst. There's so many other things that could go wrong there. Especially given we think the high flyer Tesla's, probably the one to be in. So I'd rather just trade that one on the long side, even though we don't have a positive, forward forecast. I think the relative strength is at least interesting and notable. Also another one, NIO. I've seen a lot of people calling for, this is the end of the sell-off in Chinese tech stocks, and that it would make a lot of sense intellectually. We've come quite far. There's some events later in the fall that potentially could catalyze a move higher, but our data just don't see it yet. Significant downside here, 30% over 12 weeks. But what I really wanted to get into was, especially on inflation day, because used cars are, an input, and this is something that we've been thinking about as people have, kind of stopped buying new cars. Rather, they had used cars which needed servicing. So AutoZone, O'Reilly, things like that. It all kind of fits in. So check these out. Pretty nasty performance for the auto services sector, let's say. And I really want to hone in and talk about AutoZone. I'm going to share a different screen here. So this is, like I talked about last week on AbbVie. This is another name that I've been patiently waiting on the short side, because this thing is just a machine. So look at this weekly since. All right, so that's a clean triple off the 2020 lows. There are some decent reasons for that, I would say. It was a time of used car prices going up. You needed new parts for those things, all of that. So it did make sense. I would argue that a 300% performance, on an absolute basis over like 2.5 years, is pretty ridiculous for just an auto, sales and services company. So we're going to make the call here on the short side. I was looking at put spreads down to about 1,800, something like, a September 2000, 1,800 bear put spread, where you're long the 2,000 strike and short the 1,800 strike, which is right under our target, potentially makes sense. The trick with AutoZone is, because it's so expensive notionally, the options are also very expensive notionally. So for people with, smaller accounts, for example, this is a tougher trade to do, because you're putting out, several $1,000s a contract in some cases. So a put spread would be a way to mitigate some costs here. And I really just like the location on this. I mean, nobody tuned in for my technical analysis, but that's 3 lower highs in RSI, against a double top. So this is certainly, on my list with AbbVie in terms of last leg of the sell-off, leaders, things that haven't pushed lower yet, that we kind of need to complete the cycle. That's why, we're targeting UNH on earnings tomorrow, both because we have a terrible earnings forecast for it, and we just don't like the sector. We just don't like, we think we need to let the air out of some of these names and sectors who have been a place to hide during the recent turbulence, especially because both stocks and bonds have gotten hit, right? So it's more impressive that these names are holding up, because AutoZone's outperforming treasuries over a period, right? Would I expect that to persist? Absolutely not. But these dislocations can happen. Where different assets kind of perform weirdly, and I'm sure this is a name that people have been trying to short, for quite some time. So anytime too many people start looking at a trade, it stops working. That's kind of one of my core principles of trading is, things move when you're not looking for them to. Once everyone starts staring at something, the move's over. Let's just take a look back to, okay, so we're still at like 37.50 in SPY. So that, that's going to be an interesting day given, recent pushes lower have failed. So I don't know if we're waiting for this number to validate, the ability to move, finally move much lower, which it looks like as we just cracked 37.50 here. But this is going to be an exciting day for us, at least, who are have been pretty bearish. We're going to be very excited about banks this weekend, or the end of this week into next, because I think that's going to be the next clue in terms of our flipping to back to bullish. We haven't been bullish in the the life of this show, save a few sectors. So I think that'll be exciting. But tune in tomorrow. Travis and I will be live, and we're going to talk about stocks to watch for July.